So one company I wrote about and talked about a lot around the time of its IPO was Lemonade, the insurance disruptor. And to say the stock has been an underperformer wouldn't even really begin to describe the situation. It's been a pretty terrible performer. It's down more than 90% from its high. And a lot of people ask me pretty often if it's still worth buying. So I still hold a pretty small position in Lemonade stock. I want to run down their numbers. Before I do, please click subscribe to my channel if you don't already. And please take a look at the link you see on your screen for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, first, the bad. And it's kind of my two biggest issues and reasons why my position in Lemonade isn't larger. So, first off, the company's still losing money pretty fast. It has a lot of money. It has almost $1 billion in the bank. It has $993 million of cash and equivalents. But if you just look at its cash flow for the quarter, it was almost negative $50 million. So the big question has always been whether or not Lemonade will be able to become a profitable business before it runs out of money. Because you don't want to be trying to raise capital in this environment. It's just not going to work. So that's still a question. It's doing better. It's losing less than it was before. So that's a good thing. And the other bad thing is it's still not doing a great job with underwriting. It ran an 87% loss ratio for the quarter, meaning that for every $100 it took in premiums, 87 was paid out for claims. Um, the company wants it to be under 75%. So it's still a long ways off. And it says it's almost there, excluding natural disasters, but that's kind of a neither here nor there metric. Insurers need to be able to prepare for natural disasters and things like that, and not I don't really need to know what the numbers would be if conditions had been perfect. So it's an 87% loss ratio. That's still too high. But now the good. The business continues to grow impressively. It has 1.86 million customers. That's up 23% from last year. The average customer is paying $352 in premiums. That's up 26%. So combine the two, the in-force premium is up 56% year over year to $653 million. And it's guiding for that to continue for the rest of this year. It expects to end the year with 700 to 705 million. So growth is still very impressive. The loss ratio, although it's still too high at 87%, is better than it was. That's a 3% reduction from the same quarter a year ago, despite more natural disasters to deal with than a year ago. So they're moving in the right direction, which is kind of the goal. You're not going to get there overnight. Um, Lemonade's customer retention is 5 percentage points better than it was a year ago. It's 87% annual dollar retention. That's an all time high. And as I mentioned, the company's losses are narrowing significantly. So it's making progress on its path to profitability. It's not completely clear yet. The company has very high expenses, particularly stock based compensation, which doesn't show up in that cash outflow, but is still worth considering. $60 million in expected stock based compensation for 2023 for a business whose market cap is roughly $1 billion is a lot. The auto insurance rollout is still in the early stages. So if Lemonade can continue to scale this way and keep the numbers moving in the right direction, this could ultimately be a big winner. It's been a long time since we had a brand new insurance company really rise through the ranks and disrupt the mainstream insurers. But Lemonade's doing a great job. Its customer satisfaction is off the charts, and it's moving really. It's doing all the right things in a tough environment. So it remains to be seen if they can get underwriting right, because that's really, if you're not going to get underwriting right, there's no sense in being in the insurance business. So that's the number to keep watching in the quarters ahead. But things are trending in the right direction, and I would give Lemonade a B plus for this quarter. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.